All right. Hello, everyone. Welcome back to another live stream. Hope you guys are all doing well. And yes, we are live. So today we have a new series starting again about just a weekly regular crypto news live stream. So I want to try to do one of these live streams every Monday, right around this time, 10, 11 a.m.-ish. And we will cover all of the hot topics, all of the latest trends and narratives for the past week. And you guys will also have a chance to ask any questions you want. So hopefully this can act as a good time to connect with everyone and make sure, we know exactly what's happening in the market. So let me just make sure everything's good here. Yeah, we should be good. All right, so on today's episode, we are going to cover quite a bunch of interesting topics. So we're going to cover Bitcoin price, Ethereum price, Bitcoin dominance to look at how the altcoin market is doing. We're going to look at some of the strongest performing coins. There actually are a couple that really stand out, and I'll show you guys why these are even making huge moves. And then we'll also cover PayPal's latest news, which is they just launched their own USD stablecoin on Ethereum just this morning. So we'll cover what that means. Yeah, one sec, let me stop the music. So we'll cover what that means. And then we'll also cover, of course, the Coinbase Layer 2 launch. This is a very significant Layer 2. Definitely pay attention to this. And in fact, I think this is launching to mainnet tomorrow. So we'll go over exactly what that means. And then lastly, I think there is a very big FUD event that we need to cover, which is the ongoing Tether depeg. So this is a combination of Tether, Operation Choke Point 2.0, where they're getting cut off by US banking, Binance actually having a public fallout with them, and also Justin Sun and Huobi Exchange having a strong play in this because they are very close friends with Binance and CZ, and they themselves all together used to kind of control Tether, but now they are getting cut off from the redemption. So we'll cover what that means and a potential fallout event that could be happening. And yeah, and then we'll do Q&A at the very end, and that will be all. So, okay. So before we get started, how's everyone doing? Let's see if I recognize anyone in the chat here. Handsome man, Sapra. Assad BTC, yeah, good tip on the music. And let's see. Okay, great to see everyone, and let's just jump right into it. Okay. So let's go over the charts first. Let's go over Bitcoin, Ethereum, and look at how the overall market is doing. So I've been following this potential short-term correction for Bitcoin for almost a month now. So there's a couple things to note here that makes me feel like a correction is coming. That's why I've been calling this initial move here. So basically, a couple things here. First off, 32K at Bitcoin is a very, very significant resistance. You see it dates all the way back to May of 2021 and then beginning of 2021. So the first two major corrections in the bull market printed a very significant support level at 32K. But then once we had the bear market actually come out, a lot of people wanted to buy at 32K, but they absolutely got flushed out. And that's why the next time that price revisits 32K, that tends to be a strong resistance. So a strong previous support that gets broken to the downside turns into a strong resistance on the next uptrend. So this is the first thing to note. Second, notice how Bitcoin's price here is making a bearish divergence compared to the RSI. So here we have the RSI indicator, which is a momentum indicator. And you see, even though price has made a higher high, so from 30.5K to 32K, the RSI has made a lower high. So just, you can look this up on Google. bearish divergence RSI or bearish divergence MACD, it will show a similar scenario. So basically, whenever the momentum indicator is showing that the momentum is slowing down while the price still pushed a little bit higher, that usually is the first sign that a reversal is coming from the price. So this is the second sign that's making me a bit worried. And of course, because this second high here also doesn't look that much higher than the previous high, so what this could easily turn into is something like a double top pattern like this. But in order to finish that double top and confirm it, we need price to at least retest 25K to see its reaction there. And that's why I have these lower levels drawn out. So if a correction continues, here are the couple levels I'm watching. So 25K, which was the top of the August rally last year, and then top of the February rally before Binance was sued by the CFTC that caused this crash. And then right here, I don't exactly remember which event this was. I think this was right around the BlackRock ETF application, printed this candle. So 3 of these tests make up the 25K level. And then here, this level, which also dates back to here and here, is kind of my bottom line right now. I think I have made a TikTok video about this. So right around 20K will be my bottom line for Bitcoin in a medium to long term, because this candle really, this huge wick that you see on the weekly here, this was printed when Binance was sued by CFTC, and it was the biggest FUD that we had for a while. So I don't expect this level to be broken even on this correction. So that's what I'm looking at between 20K and 25K. I think that is going to be my ultimate target range for buying more Bitcoin. Not saying that's for sure a price target, but just that if price gets into this level, I think the risk to reward there for buying is super good. So that is what I'm looking at for Bitcoin. And of course, looking at just in case this plays out, the first thing we need to see is a reaction from 25K. So this pairs nicely with the 21 weekly exponential moving average. So you see here, this blue average line. So the 21 weekly EMA usually is the long-term bull market support and long-term bear market resistance. And you see this level has held nicely on 3 of these dips, right? So once we officially started the new uptrend, first dip, wick below it, but bounce from it. Second dip, wick below it, bounce from it. So first we need to see the reaction at 28K, but this is getting very close already. And considering that we've had such a strong rally, I think this is unlikely to bounce right from 28K. And then the next level will be at 25. And if we revisit 25, this will look much more similar to a double top pattern, in which case I would aim to be buying between 20 and 25K. So that's kind of my outlook right now for Bitcoin. And just a little bit more on the shorter term levels I'm looking at. So this is the daily chart. You see how even though these diagonal trend lines usually are just memes, they don't actually work. But it's interesting to see because most of the time, these trend lines, you want to bet on them actually being broken. You don't want to bet on just them, holding as significant support levels. So this diagonal trend line also dates right at around 28.4K. So this is pretty much the 21 weekly EMA. So this is the first sign of potential bounce, but I don't think this will hold. And going back to the basics of how a uptrend is determined, we need to continue to see higher highs and higher lows in order for this Bitcoin uptrend to continue. In that case, higher highs are at 31.7K to be exact. And then we have the higher low, right? Last higher low, 25.1. And then the next one at 19.7. So that's all you need to consider here. So in order for Bitcoin to continue its uptrend, we need to see Bitcoin at least make a strong reaction from 25K. If this next bounce comes above the 25K, this would be really strong. So this would actually make this a much shorter term correction, and I would expect 32K to be tested next. But if 25K doesn't hold, I think this is going to be a bit longer, going into this range between 19 and 25. And that's the gist of it, right? Overall, definitely leaning on the bearish side and considering some of the fundamental catalysts coming up as well for the Tether FUD, which we're going to get into. Yeah, so that's outlook on Bitcoin. Moving on, let's look at Ethereum. So Ethereum, obviously, first of all, Ethereum always follows Bitcoin. So if we are leaning towards the bearish side for a correction coming for Bitcoin, then same thing for Ethereum. So what are the specific levels I'm watching on Ethereum? So here is the weekly chart, again, very long term. And similar to the 32K resistance for Bitcoin, Ethereum's strong resistance is right around 2000 or 1950 to be exact. So this also dates back to the beginning of the 2021 bull market, and then may crash in the 2021 first collapse in the bull market. People got flushed out trying to buy here, and then you see the first rally in the bear market got rejected from it. The second rally here also get rejected, and now this is acting as a very significant resistance level. So that's the resistance, and yeah, looking at a more shorter term time frame on the daily, what are the higher highs and higher lows on this? So we have previous higher high at 2120, and then first higher low at 1640, and then next one at 1420. So even though this uptrend has been holding relatively well since the beginning of the year, since January, we still have to see continued higher highs and higher lows. So what that means is this next correction here, if Ethereum manages to bounce before hitting 1640, this would be very bullish. This would mean that, to me at least, Ethereum should come up and retest that 2100 level-ish to see the reaction. However, if this gets broken, then it's going to be a bit longer, at least longer term, consolidation between 1400 and 1600. So all eyes are on this 1640 level, the reaction here. If Ethereum bounces above here, very bullish. If Ethereum doesn't bounce above here, that will break the daily uptrend because it has printed a lower low, which means we're going to see a longer term, at least consolidation. Now, considering the timeline of things, considering that we are getting definitely into the later stages of the bear market, if not the early stages of the bull market, I'm not expecting new lows or anything. So I'm still targeting just using these levels to try and, buy more. So that's why I'm just kind of considering, if it gets into this range between 1400 and 1600, that's going to be my first buy target. And I think the risk to reward there is going to be super good. However, I could be wrong. So in the case that I'm wrong, what would be the price that tells me that I'm wrong? And that would be if Ethereum bounces somewhere above 1600 like this, and then it breaks above 2120. In this case, it would have made a new higher low above the 1600 and above the 1420, and then it would have made a higher high above 2120. So if this scenario plays out like this, then obviously Ethereum just continues, and I guess you can call that early bull market. I think this is quite unlikely considering we're still 8 months out from the next Bitcoin halving, and I just don't see the timeline playing out so early for the bull run. And that's why, considering everything, I don't think this is likely. But obviously, I still have these levels on the chart. And if this plays out, I'll be glad to admit that I was wrong, and I'll just continue riding Bitcoin and Ethereum. Okay, so that's on Ethereum. And lastly, let's look at Bitcoin dominance, because this is very important to show us how the altcoins are doing, how if there's an altcoin season or not. So quick recap. Bitcoin dominance takes the market cap of Bitcoin divided by the market cap of all crypto. So because of how money flows in crypto, what usually happens is whenever Bitcoin dominance goes down, this means altcoins are going up against Bitcoin, and this is what you usually call a alt season. And that's why I have these two significant levels here drawn out. So in the past 2 years, whenever Bitcoin dominance revisited these peaks, it usually led to a collapse, and subsequently these were really good altcoin seasons, times to buy altcoin. And then similarly, whenever Bitcoin the other way around. And similarly, whenever Bitcoin dominance bottomed, these usually led to a rally in Bitcoin dominance in which altcoins bleed against Bitcoin. So that's why these dominance peaks are good entries for altcoins, and these dominance bottoms is usually a good exit for altcoins. So with that in mind, what happened recently for Bitcoin dominance is that it broke above this peak level, it broke above the resistance, and it continued higher in a extended uptrend rally. So this means Bitcoin has been leading the market and altcoin has been bleeding since November of last year. Now, right after the XRP lawsuit win 2 weeks ago, right here, a lot of people were calling for alt season because we had this couple candles here where Bitcoin dominance dropped a little bit. Now, yes, this was true, right? In the past 4 weeks, altcoin did really well. But in the grand scheme of things, does this look like, this dominance is going to continue all the way down? I don't think so. I think that's way too early to tell. So that's why I have been staying on the sideline and not betting too heavily on altcoins. Most of my position is still focused on Bitcoin, Ethereum right now. So I think what we need to see, if this is a early altcoin bull run, is Bitcoin dominance's reaction at around this 47-48% level. So there could be another couple weeks where altcoins continue to do decently well. But I think that's going to be it. So after that, if we're talking about 2 months, 3 months, 6 months long altcoin rallies, that cannot happen unless we see Bitcoin dominance's reaction at this previous resistance level, which now is strong support. So once Bitcoin dominance comes down here, if it bounces, this will look really bad for altcoins, because this would essentially look like a 2-year-long bottom period for Bitcoin dominance, and then it breaks out of this range, then it comes back down to retest this range, but then continues to go up. This would mean Bitcoin and probably Ethereum will be the best bets going into the next year or so, and altcoins will continue to bleed, and they will lose all the gains that I have made in the past 6 months. The other possible scenario is if this level actually breaks down and we get back into this range, that would be much more promising. So I think once Bitcoin dominance actually breaks below this level, I will feel much more confident to say, okay, altcoin season is going to run on at least 3 months long, based on historical data here. So until this level is tested, I think it's way too early to bet the truck on altcoins and say all the altcoins are going to come back and we should hunt all the cheap altcoins. I think that's a little bit premature. I think we will get an answer in the next month or so once this level is tested, but just personally, I'm staying patient to see when this level gets tested. Okay, so that's all of the charts that I want to cover. And let's see here. Okay, looks good. Moving on, let's look at some of the major altcoin moves in the past week. So we have here all the crypto bubbles. Biggest losers here, Hex and Pulse, because they were sued by the SEC. Shout out to the Hexicans. I think it's very unfortunate what's happening. Caspa is still continuing to rally. I looked a little bit into Caspa. It's a blockchain DAG. It's a directed acyclic graph, which is not a new concept. It's similar to IOTA, similar to HBAR, hash graph. I don't exactly know why it's rallying so hard and just ignoring the rest of the market. I can't really find any news about it. So if anyone has insider news on this, please let me know in the comments. And aside from that, not much. And I just want to show you guys, I think there is here. I think if we go into top 500, maybe top 400. There is one coin that really stood out. Yeah, this one. So in the top 300, YGG, this has gone absolutely crazy. So you see here, in the past week, it has gone from 17 cents all the way up to 92 cents this morning. And this is one of the craziest examples that I just want to show you guys really quick. So you see, this is absolutely crazy. So what happened was 1 week ago, Binance launched futures for YGG, and this is a GameFi DAO. This is one of the first gaming guilds that was really hot in the Axie Infinity Rush. And what happened was they had huge volume coming into this new futures listing. So you see, usually the volume for this coin is around 12 million, 20 million. But once the futures came out, it blasted to $450 million per day volume. And then this morning, it peaked at like 500 million volume per day. So this definitely was not natural. This was 100% manipulation. So just kind of to show you an example of this kind of things that can still happen in altcoin markets. So sometimes even when coins blast off like 5x, you really got to look into a few things to make sure this is natural. So first off, circulating supply versus total supply. Look at this. 18% of the tokens are circulating out of 100% of the tokens. So 185 million out of 1 billion. This coin has been around for almost 2 years now. The fact that the stats still look like this is really sketchy. Secondly, this was heavily driven by a markets listing, right? So on the perpetuals, you see Binance futures volume here actually is way higher. It's $2 billion Binance futures volume. So pretty much all the volume was driven by market makers on Binance. This is another, terrible sign that kind of just made me stay far away from this. And then last thing that is usually a good indicator is that, let me try to get this up. The last thing I usually look at for these potentially manipulated rallies is this using this Coinalyze site. So this website is really good at finding and charting the data of futures markets, perpetual markets. These are the markets that can have heavy leverage, that can be heavily manipulated by market makers. So on this chart of YGG, what I will look at is the aggregated predictive funding rate. So the funding rate essentially tells us the difference between the spot price and the futures market price. So whenever heavy manipulation is happening, usually what leads one of these strong rallies is that because there is a very small amount of tokens circulating on the spot market, the market makers will drive up the spot price on the decentralized exchanges, on the spot exchanges, and then they would go heavily short on the futures market. So this is how they built these manipulation tactics to make money. And you can see this very clearly here. So notice how during these initial run-ups, the funding rate got super negative, right? And it still continued to be very, very negative here. So what this tells me is that even though there's heavy trading volume on the futures market, it's not actually people trying to long this coin. Rather, people are heavily shorting this coin, but they're getting wrecked because the market makers are propping up the price, manipulating up the price on the spot markets. And that's why whenever there's a big difference where the spot price is much higher than the futures price, that's when you see the funding rate being super negative. And that's why, I knew to stay away from this coin. And I think, in fact, the next bounce on this coin, I think it might be a good short for me. So it has already collapsed from 92 cents to 40 cents just in the past 5 hours. That's pretty crazy to see. I don't get how they even get away with this, but if this comes back up again for another manipulated rally, I'm gonna be looking to short this on one of these like large wicks up. But again, if you don't know what you're doing, like definitely don't jump into this. Okay, so that's some of the interesting coins that I found this week. Now moving on to some of the major news here. First off, let's cover the Coinbase Layer 2 news. So Coinbase has just launched their own Layer 2 blockchain called Base, and this is set to launch on mainnet on August 9th, so just 2 days from now. If you guys have been following the latest, meme coin news, there is a bald meme coin that was very popular last week. This was the early stages of one of the first coins to launch on the Base Layer 2. Now, I have tweeted about this yesterday. I was trying to farm, some of the early coins on this chain, and so far I think it's looking pretty good. I can't find the tweet here, but you see here are some of the early yields that I found on the Base chain. So 1,000% on wrapped ETH, 600% on ETH USDC. So these were pretty good yields. So I think definitely still worth watching and at least worth farming on the early decentralized exchanges on this new Base Layer 2. And just to give you guys some more perspective, so right after they announced this mainnet launch, which is happening this week, there are a bunch of new decentralized exchanges that popped up on this Layer 2. And usually what happens with one of these new chain launches is that people will rotate and try to get the early hype in the chain, and they will bet on the main infrastructure coins in the ecosystem. And usually these are decentralized exchange coins. And that's why you can see, for example, this first one here, RocketSwap. You can see their native token, RCKT token. This has gone up. This is crashing today, but this did go up from 73 cents to $3.50. So it has gone up like 4.5x. And wow, this is actually looking like pretty decent. So on such a dramatic crash. So I'm going to be watching one of these decentralized exchange coins to see which ones are legit enough to be getting into. Another example here, the second exchange here, Base Swap. So this exchange has their native token called BSwap. And again, similar scenario here. For the past 2 days, it has gone up from $1.20 to $6.50. Wow, so a 5x gain in the past 2 days. Pretty crazy, right? So these are usually the kind of rotation plays that if you are early on the new chain, you could get some really good returns on these trades. Now, keep in mind, a lot of people are going to be flooding into this over the next week. So I think the opportunity is now. You got to bridge in now and really try to identify the few legit coins on here. You got to identify like maybe one or two main decentralized exchanges that are legit that people will deposit their money into and do all their trading on. And that's kind of the short period of opportunity there is. And this also is really important on the base chain because Coinbase themselves said that they're not going to have their own native token. So this means with all the traffic coming into the chain, they have nowhere to go to speculate on the future of this chain. And that's why these decentralized exchange tokens might do super well on this chain. If you think about the early stages of Arbitrum, the first year of the Arbitrum mainnet, when they didn't have a token, a lot of that interest went to things like GMX, Camelot. So these main decentralized exchanges got a lot of hype in their native tokens because Arbitrum themselves didn't have a token. So we could see the same thing happening for the Coinbase Layer 2. And this is why I think it's worth getting into this chain right now. A couple interesting notes here. So Coinbase, along with their mainnet launch in 2 days, they have announced some NFT partners to be minting NFTs on their Layer 2. So they said that Coca-Cola is going to be minting their own NFTs on Coinbase Layer 2. And I don't get what the play there is. I don't even know if this Coca-Cola NFT or these Atari NFTs will have any value. But I mean, I could be wrong. You know, maybe these do a 10x. These do it similar to like Trump NFT cards. I don't know. So something else to pay attention there. Yeah. Okay. And then couple last things I found. So this is the Coinbase official announcement for their mainnet launch. They're calling this whole initiative the On-Chain Summer. So you can find all of the NFTs that they want to mint on the base layer 2 on onchainsummer.xyz. And yeah, so this is what it looks like on the website. And you can connect your wallet and you can mint one of the early NFTs to commemorate this event. And you see they have a bunch of these, early partners that will be minting their NFTs on the chain. And yeah, overall, the main thing that gets me excited about this base layer 2 in the long term is how it will integrate with the Coinbase exchange and their existing ecosystem. So if you remember Binance Smart Chain, the early days, and then Chronos Chain, the early days, because they had Binance Exchange and Crypto.com Exchange to integrate and act as a on-ramp for these layer 2s and their own networks, these brought them a lot of hype. And it made it very easy to onboard to these chains. So we could be seeing the same thing happening for Base and Coinbase. They said that over the next week, we will be rolling out support for Base on the Coinbase wallet, the Coinbase app, and Coinbase NFT. We've also made recent improvements to Coinbase wallet and the Coinbase app to help everyone make the most out of On-Chain Summer and Base. So this is pretty interesting. Very soon, you will be able to use the Coinbase wallet and even the Coinbase app to directly send money to the Base layer 2, and probably to withdraw from it. You don't need to use some third-party bridge. I think that will be really good user experience. However, will that translate to more, speculation on these meme coins, on these decentralized exchange coins on the chain itself? I don't know. And also, will Coinbase list any of these decentralized exchange coins that are, just randomly deploying on the base layer 2? I also don't know about that. So that we will have to see. But for sure, this will be one of the easiest chains to onboard for everyone that has the Coinbase app. Yeah, okay, so that's everything about Coinbase. And yeah, I found this very interesting note here. Someone already tried this. So you can already get off of the base layer 2 by simply sending Ethereum to your mainnet receiving address on Coinbase. And he has verified this himself. So it's going to be one of the easiest user experience to use this layer 2. And I do plan to make a whole deep dive video on this base layer 2, how to bridge, how to maybe get an airdrop, the main decentralized exchange coins. So look out for that video probably this week, and subscribe to the channel if you want to see it. Moving on, we have to cover this PayPal stablecoin news. So PayPal just announced this morning that they are making their own stablecoin. Pretty crazy news. So today we're unveiling a new stablecoin called PayPal USD with the ticker PYUSD. It's designed for payments and is backed by highly liquid and secure assets. Starting today and rolling out in the next few weeks, you will be able to buy, sell, hold, and transfer this stablecoin on the PayPal app. And here is the official site. So PayPal already has a crypto integration built in, so you can buy Bitcoin, Ethereum, Bitcoin Cash, Litecoin, and very soon you will have this PayPal USD in the same maybe wallet, you can call it. So will this get a ton of adoption? Probably not. PayPal is kind of one of the players that's getting phased out of the market in the US fintech market. However, I think this is really showing the first steps of the future of USD stablecoins in the US. So right after this news came out, the US House Financial Committee actually made a response to this. So the Patrick McHenry, he is the chairman of the US House Financial Services Committee. So he said that this announcement is a clear signal that stablecoins, if issued under a clear regulatory framework, hold promise as a pillar of our 21st century payment system. So this clear regulatory framework is going to be the future of USD stablecoins, and it presents a huge conflict that's currently brewing between the US government, US Federal Reserve, CBDCs, Wall Street, and the crypto native players. So in order to see this whole Payment Stablecoin Act and the latest bills that's getting in the legislative system right now, you can go on my channel. I dropped a new video just yesterday about this bill. It's called the Clarity for Payment Stablecoins Act. And basically it outlines that all USD stablecoins will need to follow this clear framework, be registered with the, I think the SEC, or I'm not sure exactly which entity it needs to be recognized by, but it has to be, registered in the US financial system, and it has to be backed one to one by cash or cash equivalent assets. And this is why in this announcement, you see PayPal specifically said that it's backed by highly liquid and secure assets. And if you read into it, it's actually backed just by cash and bonds and reserves, etc. So this is why the future of stablecoins is going to be a huge conflict, because the only stablecoin that right now fits under this US stablecoin landscape, the US stablecoin framework, is USDC. Only USDC is backed by these highly liquid cash assets. All other stablecoins like USDT, DAI, Frax, whatever, they are either fractionally backed or have an offshore entity that cannot be properly audited, or they are backed by volatile assets like Ethereum, Bitcoin, etc. So these in the future might not be allowed to exist in the US. And that's why this PayPal news, I think, is very significant. We might even see all of these other fintech players in the US launch their own stablecoins maybe in the next couple months. So if PayPal launches one, who's to say that Venmo or Cash App, Robinhood, maybe banks, who's to say these guys won't launch their own stablecoins? And that's going to be very interesting to see, like which of these players will get actual adoption, and will they squeeze out the other crypto native players in the next bull market. Okay, and that brings us to the most important news and the most bearish news for the week, which is this whole situation that's playing out with Binance versus Tether. So to get a quick summary, you guys should definitely follow me on Twitter or X to get the whole breakdown. But essentially, there is a active depeg that's happening on Tether's price as we speak. So here is Tether's price on TradingView. So you see, since this morning, it has depegged to 0.998. And you see, like, people are saying, oh, depeg, like, this is, like, not that significant. But it doesn't take much for a Tether depeg to be significant enough, because you see, dating back to the Luna crash and the FTX crash, Tether only depegged to 996, 997, and that was already enough to trigger a major bank run. So as we speak, Tether's price is already down the third largest amount since these two collapses. So why is this happening? Here's what I summarized yesterday about what's really happening. So first off, after the Binance lawsuit and CZ getting in trouble with the SEC and CFTC, the US is shutting their doors on the banking system on Binance and on a lot of crypto exchanges. And we're also seeing this week a lot of FUD coming out of Huobi. So Huobi, apparently they don't have enough reserves as well. So these guys are the main players that rely on Tether as their trading pair and as the main USD off-ramp to give their customers USD withdrawals. So back in the days, even though Binance gets shut off by US banking, all they have to do is take their Tether and then send it to Tether, the entity, and say, okay, like, we want USD withdrawal, and then send this USD withdrawal to our customers that want USD to their bank. And Tether will just facilitate that, no problem. But what's been happening recently is that Tether is not letting them redeem these USD because Tether themselves is under a lot of pressure from the US regulators, and they're getting called out by these new stablecoin bills saying that Tether is a foreign entity, and the US banks are also shutting doors on Tether. So they want to save themselves, which means they are cutting themselves out from Binance and saying, we're not going to redeem your customer deposits, your customer withdrawals. And then this has led to CZ and Binance, a lot of their accounts actually sending USDT on chain to sell into USDC and DAI, which are two of the other most dominant stablecoins, and then using them as redemption rails into USD. So this is why you see right now a constant shrinkage in USDC market cap. So you see USDC market cap has been going down just very consistently for the past few months because they're getting redeemed while USDT is not being able to redeem right now. So what this is leading to is that, okay, Binance, because they're getting cut off by USDT, they don't want to work with them anymore. So they have listed two new stablecoins that they themselves control, which are TUSD and FDUSD. So TUSD is TrueFi, and FDUSD is called First Digital USD. So if you just Google these really quick or look them up on Twitter, neither of these have clear audits. TUSD has been already sued by the original company because this is now owned by Justin Sun, and they don't have the reserves to back all of the mints. And then FDUSD also, they do have an audit, but it only audited $500 in their reserve against, I think, $1,000 worth of FDUSD minted. But since then, there has already been 200 million FDUSD minted. So I think neither of these stablecoins are fully backed. They're just, controlled by Binance and Justin Sun and CZ. So they're heavily trying to push these. And you can see this in some of the recent weird movements on Binance. So Binance has launched 2 new launch pools. So Cyber Connect and Say, 2 new Binance launch pools launched within the same week, which has never happened before. And if you see the main launch pool assets for these 2 coins, right? In order to farm these, you have to stake BNB, TUSD, or FDUSD, which are 3 coins that are all controlled by Binance. So they really need people to lock up these coins that they control and they're trying to do as much as possible to make sure this happens. I'm not saying this is for sure like a conspiracy, but just doesn't look good. It used to be that you can lock, USDT and other coins that are more, open, but now it's just all within their own ecosystem. So extending from this, what are some of the potential fallouts that could impact the whole industry? Well, if this continues to escalate where Binance cannot use USDT as redemption, and then USDT doesn't like Binance. So what keeps happening is that USDT can keep depegging on-chain. So this is already happening. If we look at some of the on-chain liquidity pools for USDT, here is the Uniswap pool for USDT against USDC. And you see this pool is 77 million USDT and only 4 million USDC. This means a lot of people sold USDT into this pool to take out USDC. And that's why there's this huge imbalance here. This means if you want to sell like 4 million USDT into this pool right now, it will depeg. The only reason why it hasn't depegged is because there are other people, market makers, constantly arbitraging this. But that's not a good idea. You want these to be balanced because they're supposed to be equal, right? They're supposed to have a similar demand on chain, but clearly it is not right now. Everyone wants USDC and they don't want USDT. Similarly, this is Curve, the other big market for USDT on chain. And you see this pool is right now 65% USDT, 17% USDC, and 16% DAI. This means people sold a lot of USDT into this pool to take out USDC and DAI. So people want USDC and DAI, they don't want USDT. And that's what's causing this imbalance. So all in all, these imbalances have already been happening because whoever owns a lot of USDT is dumping it and trying to get these other coins that can actually be redeemed for real dollars. So that's the first potential fallout, is that as this situation doesn't get resolved, the depeg can continue to happen. Another potential fallout is that USDC can keep shrinking, and it might shrink very quickly because USDC right now is the only US dollar off-ramp that still works for the crypto industry. So that's why you see USDC's market cap continues to go down here. This is because all the exchanges, in order for them to give people, real US dollars, they have to go through USDC, which means they buy USDC, they burn it, and they get US dollar out. And that's leading to the shrinkage of USDC market cap. So this is also bad. And then another more serious potential is that Binance, maybe they could have continued USD withdrawal delays because Tether is not redeeming USD for them. Once this happens, if this happens, Binance will have to react. They will have to say, okay, Tether, Tether is not letting us withdraw, so we have to use our own stablecoins. We have to use TUSD or FDUSD, and then maybe they have to make the decision to replace USDT pairs, and this will be very significant. And we have already seen this with CZ, I think, has already said something about this. Yeah, okay. I can't find the CZ tweet, but Binance will want to blame Tether for the withdrawal delays. And on the other side, Tether will not be happy because Binance, the trading volume and the trading pairs is a lot of the reason why Tether is still dominating the market. So if Tether continues to depeg, Tether will need to do damage control as well. So they will have to say that Binance is at fault. And that's why we see the CTO of Tether already saying this. USDT is being pressured down just to push market makers to react. And while suddenly a competitor born 2 days ago is getting it all, this is referring to FDUSD, which was just listed last week, but is already the fastest gainer in the stablecoin market. So this is Tether CTO just, subtweeting Binance and saying like, why are you doing this? You're pressuring us. You're depegging Tether. And yeah, basically they're fighting in public. So all in all, I truly wish this doesn't resolve in either of these players being under too much trouble. But this is, I just see a lot of scenarios that can bring coin prices down overall in the entire industry in the next couple of weeks. Because if Tether depegs continue for a couple of days, people are going to panic. If USDC shrinks too quickly, people are going to panic. If Binance USD withdrawals have issues, people are going to panic. If any of the exchanges says, okay, we're not going to use USDT pairs for trading anymore, people are going to panic. And all of these are going to, panic each other, right? If Binance withdrawal have troubles, they will blame USDT. If USDT depeg has trouble, they'll blame Binance. So all in all, it's just all of these things are linked together. And at the center of it is because none of these guys have USD banking now. USD banking is shutting their doors on Binance mainly, and on stablecoins that they don't like, which is Tether. And these guys, even though they're all rich and they all have a lot of other assets, they're all crypto rich on paper. If they cannot get banking in US dollars, what are they going to do? This is a big issue that I don't see can be easily resolved. So I think a lot of people are not reading this correctly, even though people are saying like, oh, Binance is insolvent or Tether is insolvent. I don't think that's the case. These guys are really rich. They have a ton of Bitcoin reserve, Ethereum reserve, they have coin reserve, they have other assets offshore. So I don't think that's the problem. You will be able to withdraw like crypto assets, but when you want to withdraw USD, that's the real problem. So Tether is an $80 billion market cap stablecoin right now. I even doubt that we can redeem $10 billion of real US dollars to bank accounts. When that happens, no matter how much Bitcoin you have, like Binance might have 20 billion in Bitcoin, but they cannot get that fast enough to convert it into USD and send it to customer USD bank accounts. And that's the issue that is choking off this whole situation right now. So it's not an insolvency issue, it's a stablecoin not being able to be redeemed issue. And that, I think, is real. So so this is the biggest FUD. Hopefully that is clear for you guys. And this has given me a lot of cold sweats in the past couple of days. So this is one of the main reasons why I am staying very cautious. And I think this is not the time to be betting the farm on altcoins, on Bitcoin, and on markets just going up. I think better safe than sorry. So personally, I have a lot of money in USDC right now. I think that's the safest stablecoin. And if you don't trust any of the stable coins because of this regulation stuff, you can also just put your money in Bitcoin, Ethereum. I think those will be fine. But I think this FUD could continue to develop and become something much bigger. So better safe than sorry. And yeah, so that's everything about the stablecoin FUD on Tether right now. Definitely follow me on Twitter. I'm going to be actively following this situation. Okay. That's everything I have prepared for today, and let's do a quick 5 to 10 minutes of Q&A, and then we will end the stream. Okay, so let's see. We need an updated tier list, please. A lot of things changed. I don't think so. I think the tier list I made in the beginning of 2023, it's still good. I will probably make an updated tier list every year. In your opinion, is it better to look now for Bitcoin, Ethereum, and buy more of them than altcoins? Yes, I think altcoins are too uncertain. So the next bull run is going to be heavily driven by US government, regulators, Wall Street, traditional finance, big players, and they for sure like Bitcoin, Ethereum. They have already confirmed this. And a lot of the conflict is in the crypto native markets, the altcoins, the crypto native stablecoins. So yeah, I would say focusing on Bitcoin, Ethereum is going to be much clearer for the next bull run, for the current stage, for coins to accumulate. Altcoins probably will still make a comeback, but how that will look like, which exchanges against which pairs, and when that will happen, I think it's really hard to say. So yeah, my main accumulation right now is still Bitcoin, Ethereum. Many influencers are saying that bull run will be earlier this cycle. What is your take on this? I think it's the opposite. I think it's, if anything, looking at what's playing out in the market right now, I think we will have, from now until the halving, it's going to be at least sideways, if not a more bearish period. That's kind of how I'm feeling right now. So from beginning of 2023 until now, it has been 8 months of pretty bullish, but I think the next 8 months is going to be much harder than the past first 3 quarters of 2023, because there's a lot of conflicts brewing in Binance, in the crypto native players against Wall Street, and until that is resolved, leading into the next bull run, I don't think we will have a clear and smooth bull run until this is resolved, and this cannot be resolved by just everything pumping. So I just don't see like Binance pumping all their coins, all the altcoins still doing pump and dumps, and then Wall Street coming in and then just pumping their money into these Binance coins. Yeah, like there's a clear conflict there. Wall Street is not going to give their liquidity to Binance and to crypto native players. So who's going to come out on top? And what will the main casinos be? The conflict has to be resolved in the next 8 months to a year. So that's why I think there's a lot of potential FUD that could happen during this period. OP is doing really well. Yeah, this is one of the few coins that I think is still worth looking at for August and the next couple months. There's a lot of different layer 2s that's going to be launching on OP. And if base layer 2 becomes successful, OP will be one of the main coins that is in that narrative, because Base is the first chain to launch on the OP superchain, and they are one of the They are the second biggest core developer on the OP Optimism, Superchain initiative, alongside with Optimism Labs. So yeah, OP is a good coin for next few months. What is your lowest BTC price month prediction this year? I think 20K. I really don't want to see Bitcoin go below 20K. So yeah, that's kind of my bottom line right now. The huge wick at 20K, I really want that to hold. Even with all the FUD, I think Bitcoin at the very least should hold. So because the FUD is now who controls the market. It's not that Bitcoin is a scam. So for BlackRock and Wall Street to come in and like maybe kick out Binance and kick out stablecoins, but if they also causes Bitcoin to dump a lot, that kind of defeats the purpose. So I don't know. I feel like, yeah, I want Bitcoin to at least hold about 20K. Let's see. What's your thoughts on Cardano ADA? How many X will ADA going to do? I'm in the process of making a Cardano like 2024, 2025 price prediction video, so look out for that. Damn, is the audio messed up? Let me. Yeah, actually, it's it's weird. It's not doing mono, so let me. Oh, here. What? Balance. Yeah, whatever. Okay, we'll figure it out. I see, yeah, there's a left and right like balance problem. I'll figure it out next time. Let's see. Mr. NH says USDC market cap went down 1 billion. Wow, low. So 1 billion doesn't look like a lot, right? But let me just show you in comparison of this, like what the trend is actually showing. So yes, USDC is a $26 billion stablecoin, right? So 1 billion, of course, it's not a lot. And since May, it went down from 30 billion to 26 billion. That's not a lot. Sure, it's 10%. But if, you have to think about why this is happening. People are withdrawing crypto stablecoins into US dollar, right? Because USDC is the best off-ramp for this. So if that's happening, look at USDT then. In this same 90-day period, the USDT market cap went up from 82 billion to 83 billion, right? And you see 6 months, USDT market cap went up even way quicker. So it went from 68 billion to 83 billion. So why did this happen then? If people want to put, USD, real US dollars into Tether to mint 15 billion new Tether, why is USDC going down during the same period? Right, 6 months. It went down from 43 billion to 26 billion. Why these two inverse charts? This is the main conflict that's happening. So we know which coin can be redeemed, which is USDC. And the coin that can be redeemed, it's going down, which means people are actually redeeming. They are not putting more dollars into stablecoins. But at the same time, Tether has gone up 16 billion, right? So Tether gone up 16 billion. USDC has gone down actually exactly 16 billion in the past 6 months. So what's happening then? Basically, whoever controls Tether can freely mint. And they minted 16 billion and then redeemed 16 billion through USDC into real US dollars. Like, the trend is pretty clear. It might not be completely 16 billion to 16 billion, but it's clear that Tether has trouble in redeeming, but they're still minting. And USDC being fully backed and actually can be redeemed is shrinking because people are redeeming. This is not the period where real dollars are flowing into crypto. It's the reverse. It's flowing out. So the fact that Tether is continuing to print and that its market cap, right, its market cap is at new all-time high now, it's not a good sign. That is pretty clear. So I get what you mean. It is not at kind of a like rush to the door stage yet because these USDC is still quite big, but you cannot say that the pattern is not clear here. Money is flowing out of stablecoins into real dollars, and sooner than later, these fiat off-ramps are gonna, shut all their doors, and USDC is one of the only ones left. Okay, let's see. Gaming gems. Funny enough, I am also working on a gaming coins video, so look out for that. Subscribe to the channel. Can USDT crash like Luna? It's not as bad. So it will shrink. It's at least like, I think they after the latest audits they did, USDT is at least 80% backed. It's not like Luna where it's like 20-30%. So it's not as bad, but yeah, I don't think it's going to zero type of thing, but it's more that how is this going to be resolved? What are the stablecoins that will continue into the next bull run? And it's looking unlikely that USDT will continue to be dominating. So how will it shrink properly? How will its market cap shrink properly? And the few players left that still use it, how will they use it? Hopefully that goes out slowly instead of a quick depeg, right? So that's the main FUD. The tweet from Tether CTO is legit. You can just find him on Twitter. He did tweet this. Current best exchange for Canadians. I use Newton. That's a pretty good one. Okay, so yeah, I think that's all the questions I had. Yeah, all the good questions for today. So I've seen a lot. Hopefully, you guys got some insights out of this, and definitely continue to pay attention for this Tether situation over the next week and next few weeks. I think this should not be ignored. Better safe than sorry is kind of how I'm feeling right now. So yeah, that's it for today. Thanks guys for joining in, and please subscribe to the channel. Follow me on Twitter, virtualbacon0x. And also we have a Telegram alerts channel just at Virtual Bacon, link in the description. We drop alerts and daily news on there. Check that out as well. And yeah, I'll see you guys again next Monday for another weekly news live stream. And yeah, cheers. Bye for now.